Hello friends, welcome to my YouTube channel. In this video I come with a new multi-bagger stock idea. So before I move to the video on this multi-bagger stock, I request you to subscribe to my channel so that I can actually post new videos regarding multi-bagger stock ideas. So let us move to the video and the company that I am going to discuss today. So the company I am discussing today is a bulk drug manufacturer. It's a mid-cap company. It serves various pharmaceutical, nutraceuticals and food industries globally. The company commenced operations in 1993 with a single unit in Tarapur, Maharashtra. It became a publicly limited company in 2005 and listed shares in the Indian Stock Exchange in the BSE in 2016. With headquarters in Thane, the company has a state of manufacturing unit in Maharashtra and Gujarat state. And it has 4 API units for API intermediates and 1 unit for formulations, which are designed to meet the requirements of both advanced as well as emerging market opportunities. In a short lifespan, the company has gained loyalty from national and international customers. It has metamorphosed into a specialty company and focused on development, manufacturing and supply of amino acids, nutritional supplements, active pharmaceutical ingredients, API, or for pharmaceutical, nutraceuticals and food industries. And the company's products enjoy good fame in the overseas market because of the high quality and cost-effective range and assured time deliveries. So the vision of that company that I am discussing is a mid-cap pharma company is to become a leading pharmaceutical company in India, to become a significant global player by providing high quality and affordable products, and with commitment to continuous improvement and innovation, and to also develop environmental friendly systems and contribute towards better healthcare through innovation. The company's share price is listed in BSE, and as per the last week, the current price was 486 rupees and the market cap 671 crores, and the stock price on a multiple is around 8.67, and book value is 155, and it is likely to post an EPS of around 16 FY21 with a high and low price 600 and 185. It has given around 100% returns in the last from the fall due to COVID pandemic in March 2020. From around 200 levels, it reached around 486 level after touching a high of 530 levels. And the return on capital employed is 17.3% for the company. Return on equity is 16% and the face value is 10. So I don't want to continue the suspense here. The company I am discussing here is Bajaj Healthcare Limited. So I will actually take you to the website of the company to show you what are the products of the company. I already discussed about some information on the financial of the company. If you go to the home page, you can see there is a picture of that company with the employees of that working in different plants. So they are a pharmaceutical company. Already given an overview of the company and their mission and management and their the products. You can see the different products of the company in the website. So they have different products. On the intermediates, they have different products like that you can actually see, like methyl xanthine, bromethyl theophylline, like that. And under API also they have different products. Active pharmaceutical ingredients API, they have API products for urinary tract infections, antioxidants, anticonvulsants, vasoprotective, anti-hemorrhagic medicines, nootropic medicines, weight reducing medicine, disinfectant, antiseptic medicine, litrosopic agents, then stimulants, anti-anemic agents, minerals, amino acids, vitamins, like that, anti-diabetic medicine, food supplements used in the treatment of venous disease, nutritional supplement, antifungal and minerals. So they are actually present in a large variety of manufacturing different variety of API products for treating different diseases. And this API is actually a raw material for manufacturing this bulk drugs in the pharmaceutical industry. If you see the products, formulation products of the company, you can see that there are different formulation products like antacid for antibacterials, urinary tract infections, anticoagulants, antidiabetics, antidiarrheal, antifungal, anti-infective, anti-inflammatory, anti-malarial, anti-tubercular, antiviral. So you can see that the Bajaj Healthcare, this company is actually present in most of these pharmaceutical segments, and they have products, API and formulation products for different variety of pharmaceutical treating variety of diseases. So they are actually a growing company and actually present in a large variety of they produce a large variety of API products and formulations. And they are regarding the impurities also, they have products like different products that you can actually see in the website, and a lot of API products are also on the development stage that you can see in the website. Some related to anti-diabetics, used in anti-diabetics, anti-hypertensive, carbapenem, antibiotics, anticonvulsant. So since diabetes medicines are actually are very important and have a good demand, since India has a large number of diabetic patients, this product will have huge demands. So this will actually boost the revenues of the company in future. And regarding the formulations, they have a lot of products under development, and that includes anti-diabetic, anti-platelet medicines, and antibiotic medicines. So you can actually go to the website to see the details of the company, and I take you to the chart of the company and see how the company has performed. Stock price of the company has performed in the last 1 year. And the last so the company's stock price was trading at just around 86 levels in June 2016. It was trading at around 150 levels in 2017, and it moved to around 200 levels in June 2018, and when actually fell to around 180 levels in November 2019, and which rose to again 280 levels in July 2020. During the COVID pandemic, it was trading at around 200 levels. After touching the high of around 530 levels, it is now trading at around 486 levels. And the company announced recently the Q3 results for FY21. That's very good, and the company is likely to post an EPS of around 60 for FY21. So it is trading at around 8 times FY21 expected EPS and looks good for long term, even after considering the hard rise of around 140% in the last 1 year and over 300-400% in the last from the last 5 years. It has already been a multi-bagger and still holds good potential for long term returns. So let's see the quarterly results of the company in the last 3 years from December 2015. It didn't perform well in 2015. It had sales of just 48 crores. It improved to around 101 crores in September 2019. It improved to 118 crores in March 2020, and was the last quarter, September 2020, it was around 207 crores. The current quarter, it posted 178 crores sales. Expenses was 43 crores in 2015. It was around 92 crores in 2019. And in last quarter it was 124 crores, and the current quarter it was 134 crores. Operating profit is just 5 crores in December 2015. It was 9 crores in September 2019. Last quarter it was 32 crores, and the current quarter is 44 crores. It means that even though the sales has dipped, the company was able to reduce expenses and improve the operating profit. If you see the net profit, it was just 1 crores in 2015. It was around 3 crores September 2019, and the last quarter it was posted an all-time high profit of 23 crores. In the current quarter is all-time high profit. It was 26 crores. It is likely to have an EPS of around 60 in FY21. It already had posted an EPS of around 45, 48 in the last 9 months of FY21. So it is likely to post an EPS of around 60 in FY21. And if you see the annual results of the company, so the company had sales of just 117 crores in 2010. It improved to around 205 crores in March 2014, to 231 crores in 2017, to 370 crores in March 2019, to 410 crores last year, and currently is expected to post 643 crores. So the current year the sales has improved because of the normal emphasis of the government to reduce imports from China, and the API companies in India like Bajaj Healthcare had benefited. And the expenses of the company was just 100 crores in 2010. It was around 180 crores in 2014, 288 crores in 2018, and 362 crores last year, and it is expected to be around 522 crores this year. The operating profit was around 17 crores in 2010. It was around 30 crores in 2016. It was 43 crores in 2019, 48 crores last year, expected to be around 120 crores this year. And if you see the net profit was just 6 crores in 2010, and it was around 8 crores in 2015. It didn't perform for the period from 2010 to 2013. Then the sales and the profit improved to around 15 crores in 2018. It was around 22 crores. Net profit was 22 crores last year, and likely to be around 75 crores this year. So the EPS was just 13.69 in 2010. It was 16.89 in 2015. It even posted a loss in 2013. And it improved to the profit improved to around 60 crores and EPS improved to 11.82. And the last year the profit was 22 crores and EPS was 16.31. Likely to be around EPS was likely to be around 60 in FY21, 55 to 60 range. It is likely to be around 55 to 60 range in FY21 with a net profit of around 70-75 crores. So regarding the expectation for the future, it is actually going API Pharma Company had given a return to shareholders in the last 4-5 years. Given good sales profit growth. It posted very strong results for Q3 FY21 net profit of 26 crores, sales of 180 crores, EPS 19.15, 9 months. Its net profit is 61 crores, net profit revenues of 529 crores, and EPS is 44.81. FY20 it was the revenues was 413 crores, net profit 25 crores, and EPS was 18.29. The stock is trading at around 8 times FY21 EPS SPG based on the earnings growth as compared to FY20. Going by the track record, it's possible that the company will continue to grow and post revenues in future also. Since the policies regarding the reduction in import from China is likely to favor API companies like Bajaj Healthcare. The promoters hold around 67%, which is also positive. The only issue is debt. If they actually manage the debt well, and they have debt of around 110 crores and the reserves of 164 crores, so maybe due to high demand, if they are actually expanding too quickly, and if the demand for their products reduces, that is only a risk. So I hope the company increases debts only gradually, so that it is much below the balance, much below in the comfort level in the balance sheet as compared to reserves. So the reserves are 164 crores and equity is 14 crores. So it can actually declare a bonus issue in the next 2 to 3 years to improve the liquidity. The valuations will look attractive in the long term, and targets of 600 to 800 are possible in the long term if the company continues to post earning growth and manage debts well. And it has already given 400-500% returns in the last 4-5 years. So it is a good stock for the long term on dips. And I only issue is the continued earnings growth. If the company, the only risk is that whether the company will be able to go to continue to show earnings growth. So depending on that, the company's stock price is likely to be improved in the future. So a risk averse investor can keep a stop loss, but I am actually optimistic on the company for long term. So if you like the stock, please give a like to this channel and post your comments, and also read the disclaimer exiting from the page.